Looking for in your community while gaining skills in strategy and leadership? The Cayman Islands Chamber of Commerce Pension Plan is seeking volunteers to join their Board of Trustees. Representing all sectors of the Cayman Islands' economy, volunteer trustees are vital to providing quality pension services and play an important role in protecting member benefits. If you would like to become a volunteer trustee or request further information, visit chamberpension.ky, email admin@pensions.ky, or call 745-7630. The Cayman Islands Chamber of Commerce Pension Plan. We're here for you. Money Sense is being brought to you with the kind compliments of Chamber Pensions.
From Radio Cayman Studio, this is
Money Sense, bringing an informed financial perspective to the Cayman community.
Good morning and welcome to Money Sense, sponsored by the CFA Society of the Cayman Islands. I'm your host, Amy Hubble, and it's Friends and Family Day at Money Sense because I'm joined in studio by my very good friend and colleague, Jessica Jablonowski. Good morning, Jessica. Thanks for being here.
Good morning. Thanks for having me.
Jessica is the managing director of Radix Financial Cayman and also serves as a co-portfolio manager with myself on the firm's private fund, Radix Financial First Pillar Limited. So today we're talking about current events in finance and nothing more recent than the Fed meeting this week, specifically yesterday, which ultimately determines not only the interest rates charged in the U.S., but also here in Cayman. So Jess, why don't you start us off by doing kind of a rundown summary of what occurred yesterday with the Fed meeting?
Yeah, sure. So the Fed members convened for their two-day policy meeting. They've reviewed the economic data points that have been published since their last meeting in July, and ultimately they decided not to raise the Fed funds rate at this meeting. And if you look at their statement that they've prepared, and comparing it from the statement that they published in July, there are actually very little changes to that. That's one of the points that people kind of go over word by word, what has changed in their communications. They're still very focused on bringing inflation down to their target, and they don't think that the job is necessarily done yet, but they are giving some space for the aggressive hikes that they've done over the last 18 months to see how that will play out in the economy, because it does take some time to actually see that in the data.
Yeah, absolutely. And I always find it is so funny just in terms of how closely people really watch the verbs. Like, I think if you were not even a native English speaker, you would not understand the nuances of the different strengths of a particular word, or exactly when they say, we're going to keep this way for a prolonged period of time, or this is going to be data dependent. But yeah, when you think about the historical precedent that we're living in today, I mean, you think about January 2022, where rates in the U.S., at least, were 0.00%, which basically means that banks in the U.S. could lend overnight to the Fed for no money. And it also meant that all of us could get pretty cheap money for mortgages, 30 years, 20 years. And then things changed, right? So in 2022, I think they raised rates every single meeting, right? And there's usually, 8 meetings per year. And this year they have kind of continued that, but not quite as a strong enough pace. I remember last year they were raising rates, 75 basis points, which is 0.75%, versus this year they've at least kind of slowed it a little bit and kind of done it in smaller increments, and then done obviously a skip in June and then a skip this month. So what do you think that means going forward? Do you think I know we talked about this, but do you think that we are done? Are we at the top of how high interest rates are going to get, or are we going higher from here?
Yeah, well, the Fed has indicated in this current meeting that they are anticipating potentially one more hike. The majority of the Fed voting members think there's going to be one more hike later this year. Whether or not we get there, they're going to continue to be data dependent. Personally, I'm not sure that we will, but we have to see how inflation continues to track over the next couple of months. it's easier for them to say now that they're going to have that hike on the table. They've got the option for it.
Yeah.
It's much easier to
Right.
to warn it from now versus saying we're done. We've stopped inflation. We've done
won.
our job.
Mission
We're-
accomplished. Yeah.
Exactly. And then to have to go and raise rates again after. So I'm not surprised by the language by any means. I think the most surprising thing out of the meeting was that their predictions for next year, prior to yesterday's meeting, they were predicting that there would be about 4 25 basis point rate cuts next year over the course of 2024. And now that has gone down to only 2 cuts. So they do think we're going to be in this higher for longer rate regime.
Yeah, that theme, higher for longer, I think you're going to hear that a lot. You're going to there's probably going to be a newspaper headline in every newspaper around the globe. And it's really, again, funny just how one man, Jerome Powell, speaking about just a tiny nuance can really change the market expectations, GDP expectations. And when we talk about data, we're really talking about CPI, so inflation, obviously the enemy at our door, and unemployment, right? But I kind of agree with you. I think that they probably are done. It does, like you said, it does take a long time for these rate cuts to really work its way through the system. I mean, up to a year sometime, and kind of waiting and see. I think is a better way to approach it versus trying to put a rate hike back on the table once you've said you're done. Is I think kind of a dangerous situation. This Fed is very good at communicating. I think. I mean they tell you exactly what they think, and that's what when you're talking about what the expectations were for the future. I mean, the Fed, every one of the voting members of the Fed actually publish 4 times a year on the dot plot exactly what they think that they will do. And I mean, we can all sit around the table at 7:30 in the morning and talk about what we think they're going to do, but we don't actually get to vote. So I think that kind of publishing of them having to say, here is what I think I will vote to do in the next year, in the next 1 year, based on the information that they're seeing. And these are obviously smart people. We can kind of look to that and kind of see a better path, and higher for longer. It sounds like so. We'll
Absolutely.
Bad news for people trying to get a loan, or especially here, because most of the rates are variable, right?
Mostly, yes, they are. You can get some fixed rates, but it's for shorter terms. It's not like what you see in the U.S. You can't get a 20, 30-year fixed rate here. You could do 1, 2, 3, maybe 5-year kind of at the max end of fixing a rate. But predominantly we're looking at variable rates on mortgages here in Cayman.
Yeah, which is very different from the U.S. And I know both you and I are American and have had fixed rate mortgages. And banks in the U.S. really have that ability to kind of offer those fixed rates going forward because they're really able to package those loans and not hold them on the balance sheet, where it's really harder for Cayman banks to be able to do that. But, I mean, it also affects, I think, and give me your perspective on this too, is, obviously we living in Cayman, we who mostly have variable rate mortgages or variable rate loans are really, really feeling it. I mean, I know a lot of, our listeners their mortgage right now are 9%, between 8 and 9%. And really in the U.S., if you went to get a new mortgage today, you'd also have something around 7.5%, 8%. So we're not that far off from new mortgages in the U.S. But I was reading some stat that still over 80% of U.S. mortgages in the U.S. have fixed rate long-term mortgages of under 5%. So I think the implications for us is that those interest rate cycles, those interest rate actions by the Fed are going to take even longer to get through the system, as they say. To give you recently got over bronchitis, so we'll use a metaphor of that, of using an antibiotic or using a medicine to get through your system. It's going to take longer just because the majority of American households just are not feeling that pain of higher interest rates because they're locked in for those long terms. So what do you think the solution is in Cayman? Not that there is a solution, or do we just hold on, or do we just bite the bullet and go get a loan now and hope for those rates to go down on us, or what?
Yeah, I mean, I don't think there's a solution. The fact of the matter is that borrowing is more expensive today than it was 18 months ago. We can't deny that by any means. But I think, everyone's going to be in their own circumstances, and whether they need, if it's a home purchase, like there may be some need to kind of go and do that today. And as you're well aware, rental prices are increasing pretty dramatically as well if you're renting a home.
Yeah,
but
my landlords are listening.
I think it's important to kind of do your due diligence and just stick within your budget. So it's important to kind of meet with your bank, get an idea of what level of financing you can qualify for and what level of financing makes sense for you in terms of incorporating the monthly payment into your budget. And, one kind of positive thing, as long as you can kind of cover the cash flows and maybe predict out another interest rate hike and see what that looks like and how that impacts your monthly budget as well. But if you can cover that, likely from here, it's probably going to be moving down over the next few years. So that's obviously a good thing. And honestly, you can probably lock in a better rate. You might even be able to get below prime at these levels versus 2 years ago. There's no way you would have been able to get a below prime mortgage rate here in Cayman, a variable mortgage rate. So that's kind of one benefit. As we do see rates go down, you can.
Yeah, a lot of people have been asking me, just should I go for a fixed rate? Should I go for a variable rate? And a lot of the banks are kind of offering a short-term kind of teaser rate, I say. Mm-hmm. But the timing might work out pretty well, right? I mean, in terms, if we're thinking, at least from a Fed perspective, and this changes every month, but if we're thinking that, even if we pop up a little bit more this year, we think we're at least close to the top, at least to see again how the data, and by data I mean CPI and unemployment, go. And even if they're going to be a little higher for longer, if you can lock in maybe one of those bank teaser rates, they're going to be below prime for the next 2 years. I mean, the thought then is that then going on that variable rate, your mortgage rate will then adjust down as obviously the interest rates hopefully start to adjust back down. And the majority of the Fed think that the kind of neutral rate for them is 2.5%. So that's certainly, nothing like we've seen in the last 22 years. I think we're at a 22-year high, but when it comes to historical averages, we are actually pretty close, as my parents like to remind me pretty often about the rates that they were charged when they bought their first house in the 80s. So, well, good discussion. We do need to take just a quick break, and when we come back, we have some grab bag questions. Some people wrote us some questions for us, and we're gonna play round robin financial questions. So, come back with us in just a few minutes.
Are you looking for a rewarding way to make a difference in your community while gaining skills in strategy and leadership? The Cayman Islands Chamber of Commerce Pension Plan is seeking volunteers to join their Board of Trustees. Representing all sectors of the Cayman Islands' economy, volunteer trustees are vital to providing quality pension services and play an important role in protecting member benefits. If you would like to become a volunteer trustee or request further information, visit chamberpension.ky, email admin@pensions.ky, or call 745-7630. The Cayman Islands Chamber of Commerce Pension Plan. We're here for you.
This is
Money Sense, bringing an informed financial perspective to the Cayman community. Brought to you by the CFA Society Cayman Islands.
And now, more Money Sense.
Welcome back to Money Sense with Jessica Jablonowski of Radix Financial. Before the break, we were discussing the Fed meeting yesterday and how their actions or inactions in this case will affect interest rates in Cayman. The second part of the show, we're going to do something a little bit more fun. We're going to take some questions by some people that were submitted. So we're going to mix up the bowl here, and Jess, I'll let you pick first.
Okay.
I'm nervous.
What is meant by the term soft landing?
Oh, perfect.
Yeah, so soft landing is, should I take this?
Yeah, of course.
Yeah, soft landing is effectively kind of the Goldilocks scenario for the Fed. So basically, the Fed is able to raise rates just enough to get inflation under control, bring inflation down, but not so much that it causes unemployment to increase and basically tips the economy into a recession. So it's really the best case scenario. I think if you asked anyone kind of at the start of this year, they probably would have said the soft landing was going to be a very, very difficult thing to pull off. It's looking a little bit more likely these days. The economy has been progressing along quite strongly, but it's no easy feat. So I'm not going to. Obviously, the Fed's not claiming victory. I'm not claiming victory. We'll see what happens. There's actually only been one time a soft landing has been successfully achieved since World War II.
I assume it's not been in our lifetime, or at least our working lifetime.
No, it was in the mid-'90s, actually.
I was alive for it, but I don't think I was working.
Do you know where the term soft landing came from? I just heard this morning.
Well, I assume it's not from landing at the Cayman airport.
Certainly not. No, it came in the early 70s during the Nixon presidency, and it was kind of a reference to the moon landing. You kind of have to softly land on the moon.
Just a
fun fact.
Float on there. Yeah, that's true. And that recession feel, I have clients to this day. I mean, for the last 2 years, it's just over and over and over. It's like, are we in a recession? Is a recession coming? And I think it creates a lot of fear in terms of investing, right? And obviously, you and I do it for a living, and we see it every day, and we kind of live in it. But for those who do not necessarily, it can certainly be, I think, very a paranoid kind of situation where you're like, why would I invest if there's a recession coming? And that was, I mean, including the Fed, they were kind of almost expecting. They were like, what was the word a couple press conferences ago? He was like, we are committed to causing pain until basically the economy breaks, because inflation was so bad. You think back last summer, we were at 9%. So, I mean, I think it's something that a lot of people are grappling with, and obviously the market has not quite recovered from last year, but it is has been on a much better trajectory this year for soft landing again, a landing situation. But what do you think about that? Just in terms of obviously the long-term perspective on this is you never really know, and the market is very based on the expectations of the future. It's not exactly what's happening today. It's not exactly what that GDP number is. It's really how do people think it's going to react in the future.
Yeah, absolutely. And when you're kind of looking at it from an investing perspective, if you just take a step back and philosophically, as a long-term investor, I know that there's going to be recessions. It's a cyclical thing in nature. So it's just one of those things where you build a portfolio to weather through. You know that you've got the time to kind of ride through these cycles. So it's certainly a behavioral aspect that you have to kind of provide some education with people who are looking to get into the market and are nervous about it, because timing the market is the hardest thing. It's not something that anyone I know can do successfully
if you ask
over
me.
and over again.
Yeah, but on the other hand, you also have bonds being back. I mean, where obviously higher interest rates are bad for borrowers, higher interest rates are better for savers, right? I mean, for people that are nearing retirement or want to have more income, there's some benefits to that too. So, I mean, I think there's always a bright spot somewhere in the investing world. But getting caught up in whether or not we'll have a recession, or if we're in a recession, or whether or not we'll raise another 25 basis points or not, you should not absolutely worry about that when you're making your long-term investment decisions.
Absolutely.
All right, my turn. Let's see. Seems like there's a lot of people on strike right now in the U.S. Why? What does that mean for the U.S.? Man, that seems to be true for sure. Obviously, all of the actors and writers are on strike, which means we're not going to have any new good TV for a while. So I think that's how we're going to be affected. But the auto workers are also on strike. They're really demanding, I mean, what is, at least from my perspective, almost an unprecedented demand in increase in pay, and obviously the unions are the ones driving this along, to the point where this is one of those economic questions that, yes, we absolutely want to see these unions fighting for these people. We want to see minimum wage being a living wage, and we're obviously seeing that start to trickle through in Cayman too. But then you get these industries that are so easily outsourced to cheaper countries, makes us, at least in the U.S., makes it almost uncompetitive if you then have to pay your workers so much more. Not to say that you can't pay your workers so much more, but it's a difficult choice when in terms of, well, what if to the point of bankrupting the company because of worker wages, that doesn't necessarily pan out to the other side. But there's certainly got to be kind of a middle ground for this, but hopefully it can get resolved. Do you have any perspectives on this?
Yeah, I mean, I think it's a difficult one, and I'd like to think there's some middle ground. I mean, it seems like some of the auto companies did come through with, about 50% of the increase that they were looking for, which is still a big increase. It's still a 20% increase. But it's no easy answer for sure.
No, it's a really, really tough one.
And I think the good thing about it is that it is, what's happening in the U.S. is kind of bringing light to what's happening here in Cayman. There's been quite a few articles published in the Compass lately about minimum wage, and I think bringing, we don't have the massive workforces and for unions to bind together here, but the activity in the U.S. is certainly kind of shedding a microscope on it here, and it's becoming more. Just presented more to the public, and that's how change starts.
A lot of people being taken advantage of on the island, domestic helpers not having kind of contracts in place. I mean, so I think all of this kind of trickling down to here and starting to get some enforcement on those things is really, really necessary. Starting to see some increase in minimum wage here is good overall.
Absolutely.
All right, next one.
Okay. What is your favorite stock right now? I love all my stocks equally.
Sure.
I'm not a stock jockey. You're never going to get an answer on this question from me, to be quite frank. I build out a full portfolio of stocks that I think work well together in combination and diversify from there. Maybe we could talk about some of the things that...
Yeah, what a boring answer, Jess.
I know it is, but... There's no one right stock for everyone. There's no, it's not a quick fix type of solution. You have to build out something for the long term. So we focus on quality. Can kind of go through some of the characteristics that we look for. We like wide moat stocks that have a competitive advantage, not easy to kind of replicate for new companies coming into an industry. Quality stocks, obviously quality factor is something that performs well over time pretty consistently. And I think your favorite would be the late stage innovation stocks.
Well, those are kind of the fun ones, at least what we're looking at. And of course, you're right. We don't necessarily buy one stock or recommend one stock because, the stock that we're buying is in context with the rest of the portfolio. But yeah, some of those late stage innovation stocks, I mean, when we say that, we kind of say things that are on the market, things that are making money. We're usually not investing in things that are hopes and dreams. But things like Novo Nordisk has been a fun one for us. SoFi in the States, in terms of these are kind of fun flyers from those standpoints. But always want to have a diversified portfolio. And if you can't build one yourself, then you can always buy an index fund that buys shares in everything, right?
Absolutely.
All right. Is it my turn?
Your turn.
How often do you think about the Roman Empire?
The Roman Empire.
Have you seen this? Have you seen this meme going around? It's been on Instagram, and apparently, I mean, I never think for the record, I never think about the Roman Empire unless.
Do people think about the Roman Empire?
Apparently, specifically men think about the Roman Empire times a week. This is a common situation. I know, and every woman that I've talked to is like, "What do you mean? How often do I think about how often do you think about the Roman Empire?"
Never.
Never. Never.
I haven't seen this meme, obviously.
Yeah, good question. Great question. Answer for me: never. I think they are making a Gladiator 2, though. I heard. Oh, it's your turn. Sorry.
It's okay. Should I take money out of my pension to buy a house and or pay off a mortgage?
Glad you got that one.
I was going to say you should answer this one because I know you're very passionate about it. Go ahead, you go.
No, it's not like any financial planning question. It's never one of those just a yes or no answer for one particular person, and especially in a case where you have the opportunity to get a little bit more cash in a market where you are paying 9%, and you can get maybe some of your pension out. Sure, absolutely. I think that can be a real absolute benefit, especially for Caymanians who can also get that stamp duty waived. But, and this is where I am passionate about it, is I do not think that it is in your best interest to empty your pension in favor of putting it in your house. And the reason for that is that in retirement, there will be expenses on your house that you will need cash to pay. You cannot break off a piece of your house and eat it. You know, you need liquidity in retirement. And while living in your home is absolutely something that you should be striving for, and to have it paid off in retirement is ultimately, and also again giving Caymanians the opportunity to own real estate here, which we all know is very, very expensive. I'm for all of those things, but I don't think it has to be from your pension money only, if that's your only place that you've really been saving for retirement. And people, the pension is a nice place because it is the benefit to it. I mean, it's a benefit and a drawback, but it saves you from yourself, right? I mean, it's something that must be contributed by both your employer and yourself. And it's something that must grow over time, and it is for your benefit. This isn't to hurt you. This isn't to damage you. This is to be able to provide you that liquidity that you will need in retirement. So that is my perspective. I do not think that interest rates will be at 9% your entire working career. Once you are retired, you can't usually get home equity lines of credit out of your house because the banks in Cayman are very, very laser focused on having current income. So I think it is an option that you may be able to take advantage of, but do not empty your pension. Do not think to yourself, I'm going to pay off my house with my entire pension balance here, because you're going to need that. You're going to need it. Absolutely.
Do we have time for one more?
We have time for one more, I think, right, Susan? Since you stole mine.
Okay. Next year is an election year in the U.S. Should I be worried?
That will not be a short answer, unfortunately.
Yeah. No, don't be worried. That's a short answer. But no, the markets always see volatility through election years. We've seen it every 4 years, basically.
Every 4 years.
And it kind of goes along the lines of not being worried about a recession. Stay focused on the long term, build out a diversified portfolio, keep your fees to a minimum. That's the way to do it.
Yeah, it's actually one of those crises, and certainly the next year, especially knowing who's running, it's going to be chaos, no doubt.
Absolutely.
It will be chaos in the market, and the news is going to be crazy. But yeah, don't get caught off of it. I'm trying to think how many election cycles I've been through. 2008, 5. This will be my 5th one. It's almost like at least I know what's coming with this crisis. It's the crises that you do not know what's coming and how to prepare for. But historically, the markets have not performed any better or any worse under a Democratic or a Republican president. So try to ignore it. But yes, it will. You may hear about it just once or twice.
There's a headline here or there for sure.
Just low in the mentions. But yes, that will definitely be hot topic in next year's investment landscape. All right. Well, sadly, we have run out of time, as always happens. Just thank you so much for being here.
Yeah, thanks for having me.
On behalf of CFA Society Cayman Islands, I want to remind you that registration is now open for the 9th Annual Cayman Investment Forum, which will be held at the Kimpton on November 2nd. This year's topic is going to be the conundrum of constant change, and it's, as we know, always a great event. So to learn more and register, go to www.caymaninvestmentforum.com. And with that, we'll say goodbye for now, and we'll look forward to joining you again in 2 weeks' time.
Are you looking for a rewarding way to make a difference in your community while gaining skills in strategy and leadership? The Cayman Islands Chamber of Commerce Pension Plan is seeking volunteers to join their Board of Trustees. Representing all sectors of the Cayman Islands' economy, volunteer trustees are vital to providing quality pension services and play an important role in protecting member benefits. If you would like to become a volunteer trustee or request further information, visit chamberpension.ky, email admin@pensions.ky, or call 745-7630. The Cayman Islands Chamber of Commerce Pension Plan. We're here for you.